Taxes suck, but we're going to make them suck less.
Welcome to myexpattaxes.com's channel. I'm Nathalie Goldstein, CEO of MyExpatTaxes, the leading U.S. tax software for Americans abroad.
And hi guys, I'm Vanessa Wachtmeister from Wander Onwards. Here on Wander Onwards, we focus on financial and location independence, and I am so happy to be a guest here at my favorite company, MyExpatTaxes. I've also been a client for the last 4 years, but we're going to be talking about some super sexy stuff today, like
What are foreign tax credits?
buckle up, y'all, okay? Now, I think everybody is pretty familiar with the Foreign Earned Income Exclusion Act, the FEIE, which basically allows you to write off $128,000 for 2023. Am I right? In foreign income that you've earned, so you don't have to worry about taxes back in the US. But the second, less popular
Sibling?
distant cousin, who's incredibly handsome, is the foreign tax credits, which I myself use. So Nathalie, please explain to me, like I'm 5, what are foreign tax credits?
So when you pay income tax in the country you live in, that's not the U.S., Germany, Austria, France, you can use the amount of income tax you pay in that country as a credit on your U.S. tax return.
So this is helping me as well. Selfishly, I'm going to continue asking follow-up questions. So you pay tax on a euro in Germany, and you can take off a euro equivalent, a dollar
equivalent
of that euro on your U.S. expat taxes.
I think this always works easier if I just explain it in numbers. At least it's a bit easier to follow.
Slowly, children-sized words.
I
try my best.
Yes. So you earn a U.S. equivalent of 50,000 U.S. dollars in Germany. You pay about 20,000 U.S. dollars in taxes. On your U.S. tax return, when you claim that you earned 50,000 U.S. dollars, you might end up owing more like 15,000 U.S. dollars. And so you would claim the $20,000 equivalent of income tax you paid on Germany directly on your U.S. tax return. And then you will see on your tax return $15,000 U.S. tax minus $15,000 foreign tax credit equals 0 tax owed to the U.S. and the IRS.
Which we love. We love that for you. In what scenario would someone want to use tax credits instead of the Foreign Earned Income Exclusion Act, or could you use both?
So I answer the second question. You can use both. So it's not one or the other. Now, what are some situations where you would benefit more from using the foreign tax credit? And I do want to backtrack. In case you are new, this is your first video, you don't know what the foreign earned income exclusion is, there are a bunch of videos in our YouTube playlist, right? You can Google it. We have a lot of resources about the foreign earned income exclusion. But generally, there are 3 main expat tax benefits you're using. Foreign earned income exclusion is 1. Foreign tax credit, what we're talking about in this video, is 2. And we're not going to touch upon it, but there's a 3rd one with tax treaties. So going back to your question, you can use both. You can use the foreign earned income exclusion and the foreign tax credit at the same time. Now, when would you want to just use foreign tax credits? The first one is, and we will have to get a little detail. The first one is probably the most common situation is if you have children under the age of 17 that are US citizens and you live abroad in a high income tax country like Germany or basically any country in the EU.
Yep.
So sad. But anyways, you would probably want to use the foreign tax credit instead because you will usually end up paying no US taxes, right? Because we pay more income tax in our local country. However, it allows you to then claim refunds on the US tax return side for the additional child tax credit. So yes, you heard me right, that you can technically, if you have children under the age of 17 with a valid social security number and you're living in a high income tax country, you should probably be looking to see if you're getting up to $1,600 of a refund per child per year, right? So that is probably the main reason most people will switch over. Reason number 2 would be, say, you want to contribute still to your individual retirement account in the US, your IRA, And in order to do so, you need to have taxable compensation. Now, when you're using the foreign earned income exclusion, so let's go back to the example. You earn 50,000 US dollars equivalent in Germany. You use the foreign earned income exclusion. That means you would then effectively subtract 50,000 US dollars from your taxable compensation. And that means you have zero taxable compensation. So you cannot contribute to an IRA. However, if you had used foreign tax credits, you would still end up with zero taxes owed on the US side, but you would have still that 50,000 US dollars of taxable compensation in order to contribute to an IRA. Keeping in mind there's other requirements. It's not just about taxable compensation, but for simplicity's sake, that's another reason people will switch. And last but not least, number 3 is the tax rate, let's say you would have if you use the foreign earned income exclusion is actually higher than if you didn't use it.
Say that
And
again. I don't understand.
I know. So again with numbers, and this is for more high earners. So if your income is over the foreign earned income exclusion, maximum exclusion amount, which is 120,000 US dollars for tax year 2023. So if you make 200,000 US dollars, you obviously will have to use foreign earned income exclusion and foreign tax credits because you cannot use the foreign earned income exclusion alone. It's just you make too much money. So what you do is you would exclude 120K with the foreign earned income exclusion, and then the remaining 80K you would use foreign tax credits on. Now, that approach actually leads to a higher tax rate because when you use the foreign earned income exclusion, you have to kind of go through this thing called a stacking rule. And I'm not going to bore you with the details because I can already hear you snoring.
The vibe is changing.
I can already hear it, right? So basically, what I'm just telling you is if you use foreign earned income exclusion and foreign tax credit, you will end up with an effective higher tax rate normally. So if you could just use the foreign tax credit to get to zero taxes owed, just forego the foreign earned income exclusion altogether. You don't have to use it. That's probably one of the biggest mistakes is you're an expat. Everyone is screaming at you, use the foreign earned income exclusion, use 2555. You don't have to. There's nowhere that says you have to do that. You can get to zero taxes owed plus refunds, plus allow you to contribute, plus getting you an effective lower tax rate by just using foreign tax credit alone.
I think I use foreign tax credits alone now. No, but this was a huge problem for me in my wealth journey. I was so afraid and paralyzed by the idea of using foreign tax credits because I didn't understand them. And when I became a My Expat Taxes client, I really opened up my tax strategy. I optimized my wealth journey. I started contributing to a backdoor Roth IRA. And the ability to have access to people like Nathalie and her team who are expats and are doing the thing that you're trying to do really allows them to empathize with what you're trying to achieve. Can you give me a TLDR on
Girl, you have to tell people what this acronym means.
who doesn't speak Reddit here? Raise your hands. For
Our
real?
cameraman is raising his hand. So
my God.
please, ma'am, tell it to me like I'm 5 years old. What does it mean?
TLDR means too long didn't read. It's like a summary statement for whatever.
I honestly thought this whole time it was like something the DL, like the down low or something.
Oh
So
my
sorry.
God. Okay.
I'm showing my
I need
age.
to leave this.
Okay,
here.
just continuing on. Let's go.
For the friends and family at home, what is the summary statement of who should use foreign tax credits?
If you are an expat living in a high income tax country, right? So you're thinking you're paying more than 30% income tax. You generally should look to see if the foreign tax credit would be more applicable for your situation. But I will let you in on a secret. If you use myexpattaxes.com, you don't even have to think that far. You just enter in your income, you just enter how much income taxes you pay, and you will literally see in any plan, whether it's the do it yourself, get help from a tax professional, do it with a tax professional, you will literally see on every single tax package you get from us, this is what your return looks like using the foreign earned income exclusion. This is what your return looks like using the foreign tax credit approach. And, this is why we use this approach over the other approach. So you don't have to even decide yourself what you want to do. We will help you figure out what is the most optimal for your situation. So check us out at myexpattaxes.com, where we've been through it. Filing
100%.
US taxes was a nightmare when we moved abroad back then.
Mm.
And so that's why I went out to create My Expat Taxes, to make it a way more pleasant experience for you so that you can focus on living your best life abroad and let us handle the tax work.
This woman literally created a whole company because she was upset with how
I
the
am
process
not,
goes to file your taxes back to the US.
I was not going to pay $2,000 to file
She's
as
iconic.
as
She's a legend.
just a salaried person working in an IT company. That was ridiculous.
We have one more question though for the people. Nathalie, what are some of the things that unlock for someone if they choose to use the tax credits instead of the foreign earned income exclusion?
I think I pretty much touched on this and like the three reasons you would, but just so you hear it again and you really understand the benefits is you could potentially be getting refunds that's not allowed using the foreign earned income exclusion. So that is the additional child tax credit. Again, as of last year, worth up to $1,600 per child under the age of 17. You could be contributing to your individual retirement account, which is very valuable for a lot of expats. You could just be saving money on your taxes after all, because why would you want a higher effective tax rate when you don't need to have that?
Well, that is all the great information that we have to offer on foreign tax credits. If you want to follow up with more information about this option for you, go to myexpattaxes.com. Or, as Nathalie said, just start filing on myexpattaxes.com, and then the system will make the decision for you based off of what's best in your scenario.
Exactly. And I will add one more thing. If you're thinking about moving abroad, check out Vanessa from Wander Onwards. We'll link it down in the description below, but she has amazing resources for you to start your journey abroad. And once you are abroad, I will be here for you to make sure that your tax filing process is smooth, easy, and manageable.
We got you end to end. We'll see you in the next video.